Everyone, thanks for jumping back into the cryptoverse. Today we're going to be looking at the macro level picture of Ethereum. So if you guys like this content, please subscribe to the channel, turn your notifications on, and like the video. And check out the Telegram channel in the description below. We're hopefully pushing 1,800 members in the next few days. So again, we're looking at Ethereum today, which is one of the ones that we've been covering on the channel for many months now. And we were calling for this move to happen in the first quarter, and it looks like it started, essentially right when the first quarter started. Going from down in the 120s up to 280, 275, somewhere around there today. So it has been moving a lot, and clearly, there's some question. Okay, well, how high is it going to go? We can note that we did print our golden cross recently, and sure enough, we did have a couple candles down here on the daily time frame. It honestly wasn't even really much of a pullback. And that's not to say we won't have one, but what happened so far wasn't really a huge pullback. It was only 12% or so, so it's really not that much in the crypto sphere. So one of the things we want to look at is just, looking at, again, the macro level picture and the transition of Ethereum moves and Ethereum value with respect to, the US dollar. Obviously, Bitcoin is important too. And we've talked about in the past how, this first move back in January or the first quarter of 2016 corresponded with Bitcoin reaching the 20-week moving average and holding it as support. And we have gone over this before. So if I were to just show let's show the 20-week on here. So if we show that 20-week as support, back in right here when we first held it as support back in the first quarter of 2016, you can see that that's also around the time Ethereum went on this pretty impressive run, and it went up a really decent amount here. I mean, we went up. If we don't even take this low, let's just take the low before we really popped up. I mean, we went up 1,600% or so. Now, the thesis that we're saying, our hypothesis is that our returns with Ethereum will diminish, and we might see really incredible returns, but don't expect to see moves that are quite as sharp and quick as ones we've seen in the past, and don't expect them to go as high as ones we've seen in the past either, because each market cycle, the pressure for people to take profits is probably going to increase more and more, especially as people have that history or that memory of getting burned in the past, and when they and not selling. So that this is, if we were to try to correlate, this current market cycle with the last one, we could say potentially here that, Bitcoin held the 20-week again, or I shouldn't even say it held the 20-week yet, because technically it hasn't held the 20-week. It's just gone above the 20-week like it did over here. Because if you go back and look at Bitcoin, it went above the 20-week in late 2015, and then it didn't hold it as support until sometime in February. So here you can see that Ethereum really started moving in basically January 7th. So Bitcoin was above the 20-week moving average, and then it held the 20-week moving average about halfway through this move, and then Ethereum kept on moving up. Now, back over here to Ethereum, this current move that we're in, if we were to take a measured move from let's say the bottom over here, around $120 or so, up to where we currently are, we're already up around 133% or so, which is still dwarfed by what happened in 2016. Now, again, I don't think our short-term move will be this high, because if it were that high, it might essentially put us at $2,000 or so per Ethereum, which I don't think is on the table. Now, it remains to be seen how high it will go. It's possible it goes higher. It's possible it doesn't, obviously. But anyways, I think correlating our current move, or looking at our current move, most closely correlates with this move back in February of 2016, after Bitcoin was holding that 20-week moving average. And then you can see that after it had this move, Ethereum did have a decent correction. And this correction was 46% over around 50 days or so. So at some point, I think a lot of times people, when these bull markets start to occur and take off, people just think that they can't ever stop going up, and then any slight pullback and it seems like the world's ending, in a sense. But if you look at this for what it is, there will be a pullback at some point, which will likely be fairly significant. I'm not saying it's going to happen where we currently are. Ethereum could go up to $500, $600 potentially before we see a pullback. But just know that the reason I'm talking about this pullback that will come eventually is because this is a reason, if you are wanting to ensure that you take some profits on the way up during this market, then the way you can do that is by selling Ethereum dynamically, depending on various metrics. And it could be the risk indicator that I publish, and that you can access on Patreon in the description below, or it could be something else. I mean, you could just make up your own metric based on what the price is doing, and try to determine when is a good time for you to potentially sell. And there are a lot of people, when the price is $120, that would have said, man, if the price were to go up to 2.5x, I would sell it and I would have really good profits. And then the price does go up to 2.5x, and then they don't want to sell. Now, I'm not saying you should be selling at this point, but just note that your historical self, try to remind yourself, or try to remind your current self what your historical self felt, in a sense, and in terms of seeing these profits. So anyways, in terms of the risk levels, at some point Ethereum, it could be heading into the greater than 0.5 regime at some point in the next few months, and that might be a time to potentially dollar cost average a sell order, so that on the chance that this scenario likely plays out, where we see a pullback, you would be able to take some of the profits and then reinvest it once it drops a significant amount. And clearly you're not going to be able to time this bottom, and you're not going to be able to time this top, at least the local top and the local bottom. That's why the idea is to dynamically dollar cost average your sells, just like you dollar cost average your buys. So again, you can see that Ethereum is still in this move, and on the weekly chart, I would just simply ask, what pullback? I mean, if you remember yesterday or a couple of days ago, Bitcoin went back down, a few $100. Ethereum went down $40-$50 or something like that. And everyone was screaming, Bitcoin's going back to $3,000, it's going back to $6,000. And that's not to say that it can't do that, but these people, again, they play on your emotions, and they'll tell you what you're feeling, so that essentially you can validate the way that you're feeling, which is probably not a good thing when emotions are a terrible way to manage your cryptocurrency investment, considering how volatile the space is. And another thing too, for some people, trading at all, even swing trading, months apart from each other, that's not even their thing. And if it's not your thing, that's fine. You can also just buy Ethereum and hold it for 2 or 3 years. And historically, your ROI would be incredible if you did that. So that's another option. Don't worry about taxes on all these trades. Just buy it, hold it for 4 or 5 years, sell it when we're at the peak of the bull market and your grandma's asking you how you can invest or how she can invest. Sell it then, and call it a day. So that is one potential scenario. Now, looking at the macro level picture, we want to compare this with Bitcoin. So one of the things we did recently is we looked at the weekly. So we're going to look at the weekly time frame for Ethereum. We're going to hide the price. So hide the noise. Price is just irrational noise, essentially the instantaneous price anyways. I mean, you guys experience it when it goes up, plus 30% in a day, down 10% in a day. It'll have you pulling your hair out. Well, remove the price, look at the moving averages. Here's one I wanted to show. This is the 100-week moving average. You can see that, this was indicative of the bull market. And then we moved into 2018 when the price started going down. So this averaged out because you're averaging the high prices of 2017 with the lower prices of 2018. So more or less just averaged out. And then it started decreasing, sometime in late 2019. Now, this, while it seems like it might not be a good thing, I mean, this is actually fairly typical. I mean, the bear market, at some point, you're no longer going to be including the prices from 2017. So now these averages are just from 2018 and 2019, and we've basically been trending down for the most part, because if you put price back on here, you can see that over 2018 to 2019, in general, it has been going down, even though we are in a recent move up. But if we hide the price and look at the 100-week moving average, and kind of this pattern or this trend that it's on. Now let's look at the BLX. This is the Brave New Coin Liquid Index for Bitcoin. This is what I primarily use. It's on TradingView, and it goes back until sometime in 2010. So let's look here at the 200-week moving average, or let's look at the 100-week, and we are going to again hide the price. And you can see a very similar pattern for Bitcoin in the last market cycle. You see, or this is even in the cycle before the last one. So you can see a bull market, and then we have a time where we level off, we dip back down, and then going into the halving, it was more or less flat. And then from here, we started increasing again monotonically for the next several years. And then again, Bitcoin is in that phase where it kind of dips down a little bit. And remember, this is not the price, this is the moving average. So potentially it's going to, it's likely not going to change a whole lot moving into the halving, just because it takes almost 2 years worth of data. But historically, this is, the time where it might start turning around, and we might see that bull market come back. So again, if we look back at Ethereum, you can see kind of the same thing. Obviously, it's harder to really make sense of it when you only have one market cycle, because if you only had one market cycle for Bitcoin, you really might not know what it's doing. And of course, we still don't know what these assets are doing, but you can see that even Bitcoin was able to overcome this and recover to much higher highs. And the 100-week moving average peaked at 441 in 2015, and for Bitcoin it peaked at almost $7,600 in 2019. So we went from 440 to 7,600, so more than an order of magnitude increase in the 100-week moving average. So that's not even, you wouldn't even have to necessarily time a price move, a short-term price move. I mean, just the average price over almost 2 years went up by more than an order of magnitude. So if we went up, say, 414 to, let's say, I guess it's closer to it's around $7,600, maybe $8,000, somewhere around there. So let's keep it simple. Let's say 400 to 8,000. So that would be a 20x between the peak here of 2015 to 2019, a 20x. So if we were to go back to Ethereum, where would that put Ethereum? So if we were to 20x from the peak of the 100-week moving average, let's say the peak is around 385. So let's go ahead and take a measured move. Let's take a measured move from here, and let's go up. Let's say, okay, so what were we at? We're at around, so let's just, we're, it's funny because we're actually about at 400. So you don't even need to draw this. So Ethereum, it's around 400. Bitcoin, it was also around 400, and then the next cycle, the moving average was at 7 or 8,000. So again, I don't think that these returns will continue to be as high as they were in the past. At least within each asset of itself, but that doesn't mean that other coins like Ethereum can't see returns like that. Just because Ethereum was a lot more volatile in the last market cycle, and $1,000 investment in Ethereum back in November of 2015 would have turned into like 1.5 million in January of 2018, and if you had done the same thing with Bitcoin, you would not have seen that great of a return. So Ethereum did see a much larger ROI than Bitcoin. So even if we were to take essentially a 20x between this 100-week moving average of Bitcoin to the next one, and look at Ethereum the same way, we might say, well, maybe the 100-week moving average will be $7,000 or $8,000 in 4 or 5 years. That's a long time out. If we're in 2020 now, so that's looking out to say 2024, 2025, somewhere way out there. Maybe the 100-week moving average will be $7,000 or $8,000 if we just emulate what Bitcoin did. So that's kind of what I want to draw your attention to, the longer term movements of the market. I think it is really helpful to just hide the price sometimes and to get an idea of what's going on. You can look at other moving averages as well. Here's the 50-week, and you can see kind of its trend. And then if we were to look at the 50-week for Bitcoin, let's look at the 50-week, and we're going to show that and hide the 100. It looks similar as well. So we're going to look at Ethereum. You can see we kind of come up, we dip back down, and then we've already started increasing again. Look at Bitcoin, come up, we dip back down, and then once Bitcoin's 50-week moving average did increase, again it increased monotonically, which means that it continued to increase. It never decreased for a very long time. It went from here to here, so it basically increased for 153 weeks. So almost 3 years it increased monotonically, meaning the price was in general going up. And in that time, it saw almost a 3,400% return. And just that's the 50-week moving average, not the price. So I just want to, again, draw your attention to these macro level moves. I don't typically pull up TradingView every single day to make videos on it. But when the prices are moving like they have been, I think I get a feeling that more people are interested in looking at what the price is doing with respect to the bigger picture than necessarily looking at other data science type graphs. Let me know if you guys agree with that. If you guys don't, then I'll certainly continue posting other types of graphs. But I feel like these videos are well received as well. So again, if you guys want to join my Telegram community going on 1,800 members, then check out the description below. If you want to join the Discord community, there is one there too, but it's not quite as active. And then if you want to join the private community for Into the Cryptoverse, you can check out my Patreon account in the description below. And there's 3 different tiers you could choose from with different perks. And the lowest tier will give you access to the private Telegram channel. And I really do think we have a lot of great discussions in there, and a lot of people do benefit from it. We have a lot of really smart people in there that are trying to position themselves accordingly for the next several years. So if you want to be a part of that, then just check out the Patreon channel, and I will send you a link to that group. So that will wrap it up for this video. Please subscribe to the channel, and I will see you guys next time. Bye.